What's up, guys? Brendan from Market Makers, a long overdue pro trades video. We do these updates in our room, but I'm going to start putting them on YouTube as well. Guys, at Market Makers, we bring Wyckoff and Fibonacci pattern trading to all the marketplaces that we trade. We trade Forex, stocks, commodities, metals, part of commodities, all in the room, guys, as well as, of course, crypto. So if you like that, check out the video description for the link to our Discord and come try out the room. Guys, we got a lot to talk about. So if you guys like this video series, go ahead and smash the like button for me, and I'll keep putting them out there on YouTube. I'm going to blend a little bit of my commentary, what I think is happening in these markets that I've been trading over 20 years now, and what we can expect from these marketplaces, okay? So as you guys know, there's a big argument between bulls and bears, and just between bears and bears. There's the deflation-inflation argument, and then there's, is this really the top? Is this going to be the everything bubble, the beginning of the everything bubble, and we're just going down? Well, let me give you some perspective on this. First, let me start off with some of the news that's been occurring recently. So the final growth numbers for GDP, gross domestic product, came in for the last quarter four, okay, quarter four of 2021. I have to remember what year we're in, 2021, and it was 6.4%, the largest growth number since like 1983 or 1984. But what's staggering is the quarter one projections. The Atlanta Fed just came out with the quarter one projections. So the end of March this year, what the growth will be for the end of March, the quarter one projections. You guys know what that number is? We were going from 6.4% to 0.1%, okay? The marketplace, the economy is dramatically slowing down. It's going to slow down even more. Equity prices are going to be struggling because of the taper and the interest rate hikes, but also because the government isn't handing out free stimulus anymore, right? That was part of the driver of the growth. We had explosive growth with everything opening back up. Now, having said that, guys, everything inflation-wise is up. Will it turn to deflation? That's not what this video is about. I can do a separate video on that. But using a Gann market cycle, which is extremely accurate in my opinion. So W.D. Gann, he's considered the market mathematician. Anyways, he had a concept of market cycles. He predicted last year, 2021, would be the run of the bull, okay? And as you know, the SPX returned 30%, over 30% profit, okay? The normal profit return on the SPX is 10%. So we tripled the normal return last year. However, if you consider the Gann market cycle, he also said this year, 2022, would be the battle of bulls and boars, or commonly called bulls and bears. So what that means is high volatility, okay? High volatility could very well be the beginning, maybe even the middle towards the latter part of the year of a very strong bear market. He did say next year at the latest, the bear market and recession would kick in after the first quarter at the latest. So we could start seeing that bear market rear its head this year or next year. And yes, I do believe it will be disastrous. We are so overbought. The stocks are so overvalued. There's stocks in the Nasdaq and SPX that have price to earnings multiples of over 100, okay? Over 100. To give you a comparison, the average in normal bull runs is about 26 to 28 price to earnings in the Nasdaq, and it's over 100 for some of these companies, okay? So there's gonna be a lot of bleeding. In my opinion, the markets can easily get cut in half and they have more to give up, okay? Now this could be a slow bleed, which is what the Fed wants. The Fed wants a soft landing. They want to keep doing these very small interest rate hikes multiple times this year. Hopefully the market will just slowly climb down and land softly, and there won't be disastrous crashes. But market psychology always comes into play. You have to look at crowdthink, groupthink, market psychology. And in essence, these small hikes really do nothing. Inflation is extremely high. It's at just about 7%, but that's the government numbers using the exact same CPI metrics they use. If you go back to the time of Ronald Reagan in the early 80s, inflation right now, real inflation is 15%. I can tell you from owning a ranch, fertilizer cost is double, 100% higher for fertilizer. You might think, well, I don't own a ranch. What do I care about fertilizer costs? Do you eat food? Because all these costs get passed on to the consumer. That's why food costs are going up, transportation costs, fuel, energy, Rents are up 27% across the country. Used cars are up 28%. Lumber construction costs have more than doubled in some areas, especially hot areas like Florida, where there's not enough materials to go around. Everybody is feeling the effects of inflation, and unfortunately, the people that struggle the most, that live paycheck to paycheck or live on the government, they experience the most pain, okay? The wealthy people doesn't affect as much. Things just cost more. The people that need their money to have a budget to live off of, whether you're retired, a student, or somebody that is disabled, you are going to be experiencing a lot of pain with these prices, and you guys are all seeing that. So what do I think is going on with the market? The market's on a clock, okay? Supposedly the first rate hike is going to be in March. I say supposedly because there is a realistic possibility the Fed just kicks the can down the road and says, "Hey, we think it's all supply chain after further analysis. We don't need to raise rates yet." Keep in mind, whenever you're doing any type of forecasting, there's so many variables that go into effect when you're listening to people talk about the marketplace and macroeconomic space, okay? Things like war. Don't you think it might impact the markets if President Biden comes out and says, "Hey, we're sending troops to Ukraine"? If they start shooting each other, that might affect the marketplace if other countries get involved. So there's things that you can't control when you're talking about longer term forecasts. So keep all that in your head. As a trader, I evaluate the market every day as I'm trading, okay? What's going on? And part of that is news, and part of that is politics, part of that is microfinance policies. It's just, there's a lot to consider, guys. But what I think is going to happen, I'm going to show you this in the charts. I think these markets are going to get bought back up. Retail is very biased to be bullish, okay? They just have it ingrained in their head to buy the dip. I'll show you this with Fibonacci, what I'm looking at, okay? But they have a very strong bias. You know, there's a recent research article that was written by Dalbar, and it's called Why You Suck as an Investor. Great title, right? Talk about clickbait. Why you suck as an investor. So it turns out of the thousands of people they surveyed, 25% said they're underfinanced, meaning they're taking positions that are too large, they can't really afford it. If they take a loss, then it wrecks them, or they can't, or they get out of positions too early and miss out on earnings because, again, it's the risk factor. That's 25%. 25% also said, well, they have to take their funds out to use it for other things, house repairs, new car, whatever, kids' college. 50% is market psychology makes them suck as an investor. By that means they are biased. They only watch people they agree with. If you're a bear, you're watching guys like Peter Schiff or Harry Dent or Jim Rickards. If you're a bull, you're watching CNBC and Jim Cramer, okay? You have to expose yourself to other knowledge, understand there may be some good aspects to what these people are saying, and understand how to counter their argument for what they're making, because bias will get you wrecked in these marketplaces. Bias will get you wrecked. That's why I use the charts. The charts don't lie. The market, the news, the political space, the policies, the macro finance of the world is all reflected in these candlesticks on the charts. So what I think is going to happen short term between now and March, these markets are going to go bullish again. May not happen tomorrow, may not happen this week, but right now they're all in Wyckoff accumulation. I'm going to show you that in the charts. Wyckoff accumulation can always break down and turn to redistribution, but I think they're going to go bullish again, find resistance, and they're either going to flip that resistance and continue up before everything starts coming down, okay? It's called a Meltup. David Hunter talked about this, but I don't know about his numbers, but I'm going to show you these numbers here on my charts that I'm seeing. You guys can decide for yourself. Very long intro, guys, so feel free in the comments to tell me if you like commentary, you just want charts. Can do whatever you guys prefer. Let's jump into this, guys. We're going to start off on the Nasdaq on the weekly, okay? The NDX, Nasdaq 100. First thing we're going to do is consistently get targets here. So I'm going to use the same starting spot for the SPX and the NDX. And understand that price moves in waves. We cover this all the time in the crypto space, but if you're watching this from another space, this is how price will work, okay? So let me show you this. We're going to use the COVID crash, okay? I'm going to go ahead and turn my magnet on. The COVID crash. Take this low candle here, trend-based fib, to our high candle. And let's assume this may be the bottom, okay? So again, what we're looking at here is a waveform, okay, for price movement to see if we really hit a top or not. This right now, I can tell you this right now looking at this. Let me show you this with the brush. So this would be price moving up down, and then up again as a projection, okay? This is an ABC move. So this right now, the 618 here is 19,988 for the Nasdaq. If this is a correction where we're at right now, if that's a washout, if the market does turn bullish and we start coming up to tackle these different levels, we're going to almost 20,000 on the Nasdaq. David Hunter predicted that. He calls it a melt-up before everything collapses, okay? Looking at the charts, this is 100% possible to do. If we start going more bullish, you're not going to see that on a weekly time frame. It is a very delayed time frame, but I want to share with you these projection numbers, okay? Because this is what I'm seeing as well, the 618 at almost 20K. Let's go ahead and look at this on the daily. Let me walk you guys through the Wyckoff on the NDX, and then we'll do the SPX as well, okay? They're tracking amazingly similarly. So let's talk about this real quick. Here we have our backup, which formed our reaccumulation box in Wyckoff, our sign of strength. We have our buying climax candle, our automatic reaction. This establishes our trading range, okay? And this is, let me go ahead and mark these so we can look at these and you'll see these affected through here. So buying climax, automatic reaction. There's your trading range, okay? Now I can walk you through the Wyckoff steps. Here you have an up thrust after your automatic reaction. Immediate sign of weakness is shown. You have a secondary test of your ceiling there. We come to our down thrust, which is right outside our trading range. It's also called a shakeout. Then you get a sign of strength back up, another secondary test of your ceiling. You see that literally hitting on the trend line. Back to a series of down thrusts. This is a volatility phase in Wyckoff distribution. We just have massive fluctuations in price as opposed to a steady markup. You see the difference? So let's get rid of that. Right here, we come up to a final up thrust, and usually up thrusts are followed by a nice sign of weakness. Here, retail bought the dip again, brought it back up. This is your last test of supply, okay? This is when they pull the hammer down and everything starts to fall apart. You get caught right here at your preliminary test of support, confluence with these candles next to it. This is retail buying the dip again, saying, no, 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 no. We want it to do what it did right here. This is what we're looking for. We're looking for price to do this, and it doesn't do that. Price doesn't cooperate, and it collapses to where we are now. And as you can see here on the daily time frame, this is a classic volume spread analysis candle from the Wyckoff method. This is a selling climax denoted by the extremely long shadow. What does that mean? It means there's a lot of demand down here, okay? Buy the dip. They say it over and over again on the business networks. If you ever watch them like I do, I have them on all day. Buy the dip. This is people buying the dip, institutions buying the dip, Kathy Wood picking up all the AI and tech stocks she possibly can. So this is what these people are doing right here. And we establish our ceiling, and once again, we're looking for a secondary test of our base. This may be it right here. This is the daily time frame, okay? So these are the Wyckoff steps. Now, I put that same price projection out here on this time frame so you can see this. Exact same setup, looking at 17,595, 18,8, the 618 at 20K, just about 19,988, okay? If we start accumulating down here, which is what we're doing now, if this becomes a bullish, well, accumulation is bullish, but if this starts showing signs of more bullishness and breaking out, this is where we're coming back up to, okay? We're gonna be coming back up, trying to defeat fib levels and move up. So let me go ahead and show you this on a 4-hour time frame so we can get more realistic price action, okay? 4-hour time frame, guys. Let's talk about a couple of things here. So what I want to do, a couple different ways you can look at price moves here, okay? So let's do this. You can grab a pitchfork if you use some of your Phi tool set as a Phi trader, Fibonacci trader. You can grab a pitchfork, throw that up here. You can look at your resistances this way. You can see your 0.5 retracement line is kind of your ceiling right now. Just gives you a different viewpoint of what's happening here. You can see the Wyckoff steps being repeated on the 4-hour time frame because you have more candles. I don't have them drawn out here yet, but you have your selling climax candle, automatic reaction, secondary test, up thrust, sign of weakness, volatility, and that's where you're at right now, okay? We need more candles. The markets are closed on the weekends. This week is going to be very interesting. But let's look at some Fibonacci projections here. Let's see if we hit any targets and what our resistance to the rise is going to be. So let's go ahead and grab a fib retracement. Take a fib retracement here. Pull up to the ceiling here. That up thrust candle. Look what you hit. You hit the 2618 on the fib. You see that? You literally wick through it, and now you have the 1618. The problem with this is a wide range. What is this? This is almost 1,000 points. You see this? This is almost 1,000 points. Huge range, right? But that's the volatility in price right now. It's absolutely crazy. But you do have an established trading range that's occurring in here utilizing the Darvis method, which I teach in the room as well. Let's go ahead and do this. Mark off selling climax candle. Let's turn these green. So we're in accumulation. Mark off an automatic reaction. Now you can clearly see your up thrust, your sign of weakness, and you just see price volatility, okay? This encapsulates price in a volatility box where I'm going to be looking for a breakout to trade up at another level. So we can also look at this on fibs and get some projections of where we could be going. We need to see this. So one thing I'll do here is I'll just go ahead and grab trend-based fib, maybe go to the beginning of this wave. So my A is my B. Let's get the C projection. So the C projection up. Again, look at the confluence here. You see this? So what we have here is you've already gone through your 618. You're trying to get up to the 1 fib. You're rejected by the 1 fib. You have to flip the 1 fib. So really your first place to tackle is the 14,577. You get the 14,577. If you can hold that as support, you're going to have a bias to move up to that 1618 at 15,107. If you can get up to the 1618 and hold it as support, you're going to have a bias to try to get to the 2618, okay? And then you're basically getting back to where you were. None of this has to happen. To be absolutely clear, these are all fib retracement levels, meaning price, the most commonly retraced two fibs is 618. You already punched through it. Price can get rejected at any one of these levels and start returning and falling back down. And when you start sweeping the lows of where you came from, that's how you know you're going to be super bearish again. Okay, let's look and see if there's any patterns here that we need to look at, Fibonacci patterns, that can give us a sense of direction up or down where we are going. Let's zoom out to do this a little bit. Got to look at the wave patterns here. All right, let's grab our XABCD tool. We'll start the all-time high. Go to that climax candle. Go to the swing high. Go to the next climax candle. This is a white swan. So this white swan can go from 238 right here, right just about there, 15,524. Let me mark that so we can get an idea of some price targets. 15,524 right there, all the way up to the 886. So let's mark this off. 889 is going to be pretty close. 16,510. You see this range for price. Now what this is telling you is price will move in this fashion. This is a Fibonacci pattern. This is a 5 pattern. It's an advanced pattern trading technique, okay? It tells you price moves from X to A to B, down to C, and potentially up to D if it gets more bullish like this, at which point it'll find heavy resistance to arise and you'll get a retracement. Where it goes depends on market sentiment, supply and demand in the marketplace, and we can throw fibs on here. We teach these things in the room so you can find targets for potential reversals of price, okay? Price has to meet these certain ratios within these triangles that form a known pattern, okay? So that's just one method of trading. So what we need to see down here in the 4-hour time frame before we jump to the SPX, okay, what we need to see to go bullish here, let's talk about the bullish and bearishness, because everything's really young right now because the market was so volatile last week. What we need to see is very simple. Price will have to exit this trading range and it's going to form an LPS, okay? Either just beneath the trading range, something like this, like a little pocket, okay? You're going to have some candles, some climax candles. Price comes up, rolls back over, and then it goes into accumulation, and then it moves up again, okay? A sign of strength. So what we need is 2 signs of strength. We need a sign of strength that exit this trading range or get to the top end of it, form a higher low, okay? That's what first thing we need to do is form a higher low, break out. This will be the LPS and Wyckoff, accumulate, and then you know that price is trying to move up. All of these events are tradable. This is stuff that we trade in the room, guys. So the moving averages and everything, I don't even know if they've all descended at this point, but let's go ahead and check them. Let's check our 55 and our 233. 55 hasn't even come down yet. 21 and 34 already have, I'm sure. So let me go ahead and put those on as well, I guess. 21, we're probably above it. Yeah, we're above it. 34. We're above that too. So already you're moving up in the 4-hour time frame against your moving averages. Price is accumulating. This is bullish accumulation. When is it not bullish, guys? When you lose your low. Okay, you lose your low. Price can very easily, when it's volatile, you see this all the time in accumulation, come down and throw some down thrusts here. Okay, these are candles to kill the bulls. All right, becomes a bull trap as well as a bear trap, okay? Because it looks like it's going down, and then it reverses. It'll kill bulls as well, because if people are bullish here and they take longs up here, price dips down outside the trading range, exit your position. Really, they're just trap spaces, and it happens all the time with large institutions playing with your money, because price is just doing this. This is very hard to trade like this, right? And when it does that, people take positions, comes back up, screws them that way, does that, people take positions, comes back down. That's how, this is the Wyckoff price method, guys. This repeats itself over and over again in every asset class you can possibly trade. Let's go to SPX before this gets too long. SPX did the same thing on the weekly. COVID crash, guys. Let's look at some projections for the SPX if this turns out to just be a correction and a continuation wave, okay? And again, a continuation wave being A, B, C, okay? That's what we're talking about when we talk about a continuation wave. Get rid of that. The 618, most commonly retraced to fib, gets you to 5854. That's 5,854 for the SPX. If you go bullish, even on the weekly time frame here, you can see the big selling climax candle, guys. There's so much demand. Retail has it beaten to their head to buy the dip, okay? So let's go ahead and look at this in Wyckoff. Daily time frame, guys. Daily time frame, we have our backup, which once again is reaccumulation before a move up. Sign of strength, you see that right here. Buying climax candle, automatic reaction. We need to mark off our areas here, okay? This is a daily time frame. Let's go ahead and do this. Horizontal ray. We're going to mark off an automatic reaction. Mark off our buying climax. And again, we're going to change these to red because this is a distribution box. I'm going to do this. And now we can walk through the Wyckoff steps. So, secondary test, and then we fall down to a down. This is a deep sell-off right here. You see this down thrust? Lots of people got wrecked or exited positions here, okay? And then it comes right back up, immediate sign of strength. This could also be some type of spring, but this pops right back up into the trading range to an up thrust, followed by yet another show of weakness, down to another down thrust type spring with an immediate sign of strength to an even higher up thrust. What this is, guys, is showing you the massive amount of volatility in a distribution box, okay? Keep in mind, this is a distribution box. You are no longer in a markup phase. You are trading in a range with extremely high price volatility designed to milk retail investors. Milk you with up thrust, milk you with down thrust, to sell when you don't want to sell and to buy when you shouldn't, okay? That's all this is. That's what Wyckoff is. And so over here, after an up thrust, you have your complete sign of weakness. And then look at that demand candle, long shadow. You get another up thrust in your last test of supply. Again, they release the hammer, release the Kraken. Preliminary test of support based on these candle clusters that I'm drawing all over the place. Bob Ross in this chart. And then a complete sign of weakness drops us into our new accumulation box, which is where we're at now, right? So again, let's look at some different things here. Let's see what we can see. Let's look at some projections. Did we hit targets on Fibonacci? There we go. Get rid of this. Let's take a fib retracement. Let's just look here from this sign of weakness candle to that LTS line. Look at that, you got right to the 2618. You see that? You knife through the 2618. SPX was oversold. You're using that as support. And again, you're vacillating between 44.80 and 43.13. So you have like 150, 160 point vacillation here in price. So it's important to start establishing ranges. And I do this once again utilizing Wyckoff, guys. I denote my selling climax candle. Change this to green because we are in accumulation down here. And then my buying, my automatic reaction candle. This gives us a range. This is what I'm looking for, okay, from price. And then again, what you're going to see have happen here is you're going to see price fluctuate in this box. This is this is the daily time frame. We're going to look on the 4-hour time frame, but you're going to see price fluctuate, come up and make up thrust, come down and make down thrust, fluctuate in this trading range, but we're looking for a breakout, a rollover to give us a reaccumulation box, okay? And give us accumulation, hold key support, and then a break up if the market turns bullish. If it turns bearish, it's very simple, guys. It's not that complicated. If it turns bearish, it comes down maybe to make a down thrust or something, to do a shakeout, and it just keeps dropping. Just like this, okay? It just keeps dropping. It doesn't hold any type of support structure. Your volume or momentum, whatever you're using in your indicators, just keep falling apart. So it's quite easy to see. This is a daily time frame. Let's go ahead on the 4-hour time frame where we could actually trade a little bit better, okay? Or where I do all my trading on the 4-hour time frame. So guys, 4-hour time frame. Again, you can see the Wyckoff steps a lot clearer here, okay? Your selling climax candle, look at the shadow on the candle. Nice demand wick. Your ceiling is formed. I've already labeled this stuff so we don't have to waste time on it. And now we're just at the volatility phase. There's your up thrust outside your trading range. Sign of weakness, back in volatility. You see this? That's where we're at right now. We need some clear steps to really define when we can break out. This could happen on Monday. This could happen on Tuesday. Or we could just be doing this all week. Dipping down, faking people out, dipping up, faking people out, doing this. And in one of these two directions, we're going to end up breaking out or breaking down. And if you know the Wyckoff steps and if you know how to track volatility and understand key support resistance levels, you would be able to do this stuff at home, okay? Let's look and see on the 4-hour time frame if we hit anything key here. Let's look, 4-hour time frame. Let me go ahead and look at a couple different indicators first. Our volatility and everything's probably not caught up yet. It's already starting to bottle up on the 4-hour. You see this? So both the indexes are starting to bottle up. You're trying to break above the median line here in the reverse engineered RSI. This functions like Bollinger Bands. The thinner it gets, you get explosive moves. When it constricts, and the thicker it gets means you had a big volatility move like that. Already it's starting to bottle up on the 4-hour time frame. I'm telling you, these markets want to get bought back up, and I expect them to go up. I expect crypto to go up with them, and this is what I'm thinking. Markets are going to pump, and at some point they're going to reach a level, and we're giving you those projections where they could hit. I mean, realistically, which is absolutely mental when you think about it, but it makes sense. Basically forming your blow off top before a collapse, okay? And that collapse could be down in segments. That collapse could just be a series of corrections or crashes. We don't know. Again, you can't really forecast that with any amount of accuracy, so I'll just keep making the videos and updating you guys as we go along. But let's look at our moving averages real quick, see if these have descended on the SPX. That's the 34 and 55. 55 hasn't got down there yet. We already flipped the 34. So again, this is all bullish accumulation right now. Let's see if we have any patterns on here, just like we had for Fibonacci, just like we had for the NDX. Let me find my all-time high. 5-point fib pattern. I think that's the higher candle. And then to our low. This is almost the exact same pattern. This again is a white swan, guys. This is again is a white swan. Let me see if that candle's higher. That is 47.50 and that is 47.46. Yeah, okay. So I had it right. So this again is a white swan pattern on both indexes. Both of these patterns are bearish, but they require price to rise. And again, price can come up to the 238. I mean, look at how close that is to the trading range. And come up to the 238 on this pattern where it's active right here at 46.39, all the way up to the 886 right about there at 47.92. I mean, what was your all-time high here? 48.20. This pattern, if this does turn bullish and track to this pattern, even though this is a bearish pattern where price would potentially reverse and retrace some, it could still find support and move back up after a retracement, but it is a reversal point. This pattern almost gets you back up to the all-time high. So guys, I just watch what happens, because I do believe you're going to see these markets get bought back up. If they do break down, they break down, and we know targets for the downside, okay? But the way they're trending in accumulation, they're trending to make the next step, which again will be trading at a higher low. There's your low, and right now you have your volatility. We're looking for a higher low rollover, maybe just on top of the trading range or just outside the trading range, more accumulation, for a pivot out. Okay, this is what we're looking for. That'll give you your higher low concept, and that's the next step in Wyckoff accumulation. Again, that's 4-hour time frame. Don't know how many hours it can take. Wyckoff is not a time thing. It is a step-oriented thing, okay? All right, guys, hope you enjoyed the videos. Feel free to ask me any questions. Tell me what you liked about the video, what you don't like, what you want to see more of, and then I can adjust if enough of you end up saying the same things. All right, guys, have a happy Sunday. Talk soon.